Hello everyone, welcome to, of course, another episode of Quadrant Lunch Talk. Okay, so today, en bloc is, I would say, Singaporean, one of the most favorite topic to talk about when it comes to property investment or property on the whole, right? And of course, I think in the last few days, we have seen a newspaper article basically came out that once again talk about en bloc. Okay, so let's talk a little bit about en bloc. Okay, so let's see if this is something that will en bloc actually make a comeback or what's my thoughts on it. Okay, so if you guys are here live with me, just do type in the chat, say hello, just say hello over here, and of course maybe even put in the comment section on your thoughts on en bloc. You think en bloc is really making a comeback? You know, this is a second news article regarding en bloc that basically happened in just a short span of about 3 months. I think towards the end of 2020, there's one article came out, hey, will there be actually an en bloc fever? And then once again, 3 months later, we are in March in 2021, this article over here came out again, right? That March 14. Hi, Chin Hawk. Okay, so I mean, if you guys have any thoughts in terms of en bloc or not, hey, just put it right in the chat. You think that it's going to happen or not, and let's discuss it over here. Now, what Straits Time basically is mentioning is that en bloc fever is making cautious comeback. Why is it cautious comeback? Because recently there have been, if I'm not wrong, two small little en bloc cases that actually happened in Singapore, which is not really that surprising. The reason why I say not surprising is because small developments typically always does pull through in terms of en bloc because there is a very low risk for developer because of the fact that the land cost itself or it's a lot easier to en bloc, and then like versa, when they build, they have much lesser inventory to sell. Because you must understand the context of the whole Singapore context first on how property developers make money, and most importantly, what is their risk. So if we look at a business perspective, what's their risk versus profit ratio. Now, most developers, I would say, I would rather go for a smaller size project to en bloc rather than a big one. The reason is because there is this one rule in Singapore is that if the developer cannot sell all their products by the end of the 5th year, which means that the end result is that they will be slapped an ABSD on the entire project. And that becomes a very problematic for developers, especially if they have very limited cash flow, especially in times like this where cash flow is everything, because we are seeing construction delays all the way down to, of course, we are living in the whole pandemic situation. I think the key here is business. We look at business on the whole. Cash flow is always king to actually ensure if this business will survive through or not. And developers, ultimately, their main business model is really pretty much to use what they have, their cash position, to really tide them through a development process of usually about 5 years. Now, so therefore, cash is everything if you think about it, right? So why smaller project is very simple. It's because it's a lot easier to sell off 50 units as compared to 500 units, right? And that is why, of course, the smaller development projects typically always see a much higher possibility of en bloc. Now, of course, that once again, how does it qualify to even for en bloc? Usually it's 80 to 90% share value. Must actually agree for the en bloc and agree with the value of en bloc. Then the entire development will then be sold to the developer. So that is basically the whole context of how en bloc comes into place. So let's discuss en bloc fever, okay? And what's my thoughts about it? Now, the first thing first, I think if you ever want to look at the en bloc, I would say that you will want to focus into two main core categories. Let's look at it first. Two main core categories. So let's assume that en bloc will happen. So let's say you want to invest in en bloc projects. So I think that you should focus into two things. Number one, the first thing to focus on, I would say that there is a much better track record for a freehold project to be en bloc as compared to a leasehold project. So that's number one, yeah? So if you ever want to play an en bloc strategy, then of course go for the freehold. Now, if you're going for anything that's freehold, you must understand en bloc is something that it's I call it a potential, because anything that's potential, it might happen next year, it might happen 5 years later, it might never happen. So that's an issue about en bloc over here, right? You'll never know when does it happen, and therefore the predictability of it becomes very low, even if your project have a good en bloc potential, because at the end of the day, there must be a willing buyer who wants to buy it over. Okay, so now, so you talk about freehold is one thing. So when should you actually play en bloc? If you ask me, I think the best time to play en bloc is when you are probably in the range of around 50 something years old and above. Why do I say 50 something years old and above? Because most likely that will anyway be your last move. What do I mean by last move? Which means that if you look at Singapore as a context, when we talk about total debt servicing ratio, all banks over here will have to take your maximum age 65 years old as a basis of if you are able to borrow money from the bank or not. And therefore, if you are in the age 50, maybe early 50s and later, your loan eligibility typically becomes very low. And therefore, you're most likely making your last move. And because you're making your last move, therefore now time is technically on your hands, right? Because you're not dependent on really unlocking this particular asset and all that to really then reinvest in another vehicle. Because why? At the end of the day, I mean, even if you sell this residential property, most likely you are going to have an issue taking a loan when it comes to your next Singapore residential property. And therefore, I would say that two things that you want to look at: number one, freehold; number two, you want to take age in consideration. And therefore, if you guys are in the age of like 30 plus, 40 plus, I will probably swing towards the predictability route. Why? What do I mean by predictability? Okay, so therefore, I don't want to depend on my profits to be dependent on other people. So what I mean like that, okay? So if the only way that I can make profit is through en bloc and through capital appreciation, then the problem over here is that then I'd rather choose somewhere with a proper growth strategy, maybe an easier entry level as well, so that after X amount of years of keeping it, I can still sell and upgrade my, let's say, my residential property according to my family's goal, and not be stuck into this one particular unit that I think will have en bloc potential that might or might not happen. So the one thing over here is that when it comes to investing, we always want to invest into something that's predictable, especially if you're choosing property as one of your main investment vehicle. I believe that is because of security, that's because of predictability, and therefore do not confuse predictability with so-called potential. So once again, intention, once you set your intention right, when it comes to property, you must understand why you're investing it for. You're investing for predictable profits, then don't go into something that's potential. You get what I mean? But at the end of the day, if you want, as I said, you want to go to en bloc, then make sure that is your last move, because then whatever your family goals is and everything, most likely anyway, you will most likely be stuck with this one residential property, and then now time is on your hands. Unlike if you're much younger, when you are still making a lot of plans and making a lot of changes to your property portfolio along the way, since you're still very loan eligible. That's number one. Number two, to really then focus in the en bloc once again is that you must understand how developers make money as well. So we want to do a backward calculation to see if this project, what's the probability of it even going to en bloc. And therefore, we need to calculate it from eyes of a business owner, from eyes of a developer, instead of what you think. Yeah. So what I mean by this, so shortcut formula, roughly how are you going to do it? Very simple. You need a few tools. Number one, you need to go to URA space. So go URA space, Google it, okay, and see what is the plot ratio first. So plot ratio just basically means that how much they can build. Now, so for example, the plot ratio is 2.8 and the land size is, let's say, 100,000 square feet. So if plot ratio is 2.8, which means that the total gross floor area, that means how much the developer can build in total, will be 100,000 multiplied by 2.8. Okay, multiply by that. Now, with these, then you want to look into the nearby new launches and how much is roughly selling in terms of PSF. Okay, so with that in mind, then you can roughly know, okay, so minimally we know that the developer is able to sell it at, let's say, 2,500 PSF, because why? The project nearby within a 1 kilometer range, hey, that project is also selling it 2,500 PSF, and the developer is actually moving the units. Okay, so over time, let's say 5 years down the road, 10 years down the road, we know that the developer will new developments will likely sell higher than this particular new launch. Now, once we actually achieve this figure itself, then we want to take this 2005 PSF as a baseline. We want to divide it by 1.3. So why 1.3? Because we must give margins to the developer to make money. Okay, so which means that they need to come out marketing costs, they need to come out, they need to have profitability, and therefore you divide at 1.3, which means that they have a gross profit of roughly 30%. Okay, so minus of some of the expenses over here and there, and then it's probably still make a net profit of around 10+%, which is typically the very comfortable, not say comfortable, but I would say the bare minimum the developer would ever want to earn if they ever to go into a particular development. So once you take that, so 2005 divided by 1.3, then we must also minus out construction costs. Now, you must understand this one thing, that construction cost has been going up, especially since the pandemic hit. It used to be construction costs probably in the 300 to 320 range. As of today, we'll minimally use 350 to 400 PSF range to actually build up due to delays and so on and so forth. So you want to take that new figure minus construction costs. Now, after you take that new figure, so if I were to do the math for you guys over here, let me calculate it for you guys on the spot. It's 2005 divided by 1.3, so it's 1,900 plus PSF minus, let's say, 350 for construction costs, which means 1,500 plus PSF. They want to divide by 1.05%. Why? Because 1.05, there is still a ABS, the land, not quite ABS, there's still a payable, a stamp duty payable to the government if they were to buy into any form of resale land. So it comes up to 1,498 PSF. Okay, so you take this 1,498 PSF is basically what I call the maximum the developer will ever pay for that gross floor area if they ever want to make that 30% gross profit margin. So you got to do this backward calculation to then see how much the developer is willing to pay for the land, and once you understand how much they're willing to pay for land, divide it by the current development and how many units and what is the current gross floor area, so that then from there, then you know how much per unit is the developer is willing to pay for. So once again, now remember to put on a business mindset to then calculate in terms of, is this development even worth on blocking or not on the developer perspective. Now, of course, if you want to play it safe on a very balanced strategy for on block, then you also want to look in the fact that at least you want to have a 3+% rental yield, especially if you're not planning to stay there yourself and you're planning to rent out that unit. Then you want to have a minimum 3+% rental yield. Why 3+%? Because on a 3+% rental yield, on an interest rate of 1+%, at least you still have a comfortable 2% margins over there that then will cover at least a majority of your expenses in terms of to maintain this particular property. Because remember, en bloc is all about timing. You do not know when it's going to happen. It can happen next year, it can happen 10 years later, it can happen 20 years later. We never know. And therefore, you want your worst case scenario is to be a fully paid freehold property that perhaps you can pass on to the next generation for them to then play back the en bloc game. Okay, so once again, guys, remember two main core things to consider about en bloc. Number one, when to do it in terms of your own personal perspective, in terms of when you should do it. If it's your last move, then you want to go into a last move into a freehold property to then wait for en bloc. That's fine. Number two, put on a business head perspective to see then is it worth en blocking or not. So with those two combined, then okay, then you can consider if you want to invest the en bloc property. Okay, so with this, should you buy en bloc potential and what's the potential upside and downside? Remember, guys, en bloc is just another word for capital appreciation. Okay, and this don't need to be your only strategy when it comes to property investment. Now, And I mean, and if you really want to insist on, let's say, going to en bloc, then make sure you buy right and maybe at the right time as well. Because one thing that we always forget as investors as well, do not forget there is this one key thing called opportunity cost as well. The last thing you want to do is that if you have still a very long, what I call trajectory in your investment journey, and you want to lock up such a substantial amount of your capital into this particular so-called property, that is a potential to make capital appreciation. I think that's the last thing you want to enter into. Okay, and therefore, especially for my younger folks out there, if you're excited about en bloc and everything, hey, you might want to reconsider: is this really your best game plan moving forward for your property investment journey? Because the world is very big. Globally, there are a lot of investable unit. We don't need to just depend on en bloc to actually make a profit when it comes to property investment. Okay, remember guys, there are 3 core profits in property investment: cash flow, principal, and capital appreciation. En bloc only takes care of capital appreciation as one of the core key factor of profits. Okay, so don't forget, I think at the end of the day, you combine these 3 profits together, then really calculate ROI and see if it really makes sense for you to go into en bloc. So that being said, my verdict in terms of, do I think there's going to be more en blocs? I think so, yes. Especially a small project, I still stick true to my stance as my previous video as well. The small projects will always have en bloc no matter what. It just really depending if the developer need more land bank, they need more products to sell or not, they will typically acquire the smaller ones. Okay, but of course, if it's there going to be an en bloc fever where all the developers are just going to buying out almost any potential en bloc properties out there, I do not think so. I do not think so this will happen. So even though the article that come out is remember, it's a question in terms of will there be an en bloc fever, it's not indicating that there's going to be en bloc. I really do not think 2021 is a year for crazy en bloc year. I really don't think this is the year for it. Yes, there'll be small projects here and there that might go through en bloc. Hey, that happens all the time, be it en bloc fever or not, that always happens. But if not, then once again, remember, strategy is more important than even which property to buy. So have a proper strategy when it comes to your property investment journey, and you will always be good. Okay, with this, thank you for listening to Quadrant Lunch. I hope you guys have found value. So remember to subscribe to our YouTube channel. Just go to YouTube, type Quadrant, and then of course just subscribe to our YouTube channel. We have a lot more awesome gold nuggets for you guys as well. And also head on to our Facebook page, just give us a like. It really helps us a lot. It helps the channel a lot to grow as well, so that we can give you guys even more value. Okay, with this, signing off, I'm Shawn, co-founder of Quadrant. I hope you enjoyed today's Quadrant lunch session. See you guys.